Hello everyone, Dividend Enjoyer here, and today I'm going to be going over my $33,097.23 stock portfolio. I do want to say that I have been adding a little bit more to the Chase account in particular, and I'm going to kind of be going over each security like I always do in every video. But overall, the value of the Chase account has increased to $24,858.14. Today, it gained $13, so we've been pretty much flat, but it was kind of crazy because specifically today, I'm filming this on Monday. I was down about over $300 in the account, and then it came back. So kind of an interesting day. Definitely some opportunities there in the derivatives market for sure, but also even on the stock market. I mean, just getting lower prices is always a good deal. I do not endorse options personally because I think it's gambling. But carrying on, the overall gain loss up $79.17. Estimated annual income $647.43 of dividends, which is amazing. I mean, it's always an added plus to be able to get some dividends as income coming in. But starting from the bottom, we have Hasbro Inc., ticker symbol HAS. Currently have about a dividend of $10.70, I believe, coming in. Overall, up about 88 cents on it, so pretty much flat from where I bought it. I thought that this would be a pretty good addition just because a lot of their production of toys is more domestic than a lot of their competition. So if tariffs increase, they're going to have that long-term advantage against their competition that produces mostly in China. And if tariffs decrease, then they're going to get overall better cash flows. So either way, I feel like it's a win-win for Hasbro. And you're getting Wizards of the Coast, which own Magic the Gathering. You're also getting Dungeons & Dragons, which I think the trend is going to be that it's going to increase in popularity, especially if you've seen the prices of some of the Magic the Gathering packs. I know that right now it's about $770 just for a collector booster pack of Magic the Gathering. So I mean, the prices on just that side of it, the whole card thing, I think is going to be a huge bonus for Hasbro. And it has been just a cash-generating machine. Definitely something interesting to look up. I just wanted to have a little bit into Hasbro just so that I could be a part of it. And if it skyrockets, I'll be able to hold some Hasbro. But I also like the game side. I think that they have a lot of valuable IPs. And I think if they're able to transition them more towards the online side, I think that they can make a lot of money. I really think that Hasbro is an interesting play. I think that it has the potential to make a ton of money, but you know, it's a little bit riskier. It's probably the riskiest, probably overall the worst idea in the portfolio, just saying. But I really think that it's undervalued for what it is. Next up, we have a very high performer in the portfolio, kind of a surprise to me. TXRH, or Texas Roadhouse Inc., currently up 10.01% or $100.38. I decided to get this to $1,000 in. Now it's worth about $1,102. That $239 I got in dividends, I just reinvested. Now I'm collecting all my dividends in cash in case anyone's wondering. But Texas Roadhouse was very undervalued when I got into it. I still think it's probably undervalued where it's at now. Again, not financial advice. Not guaranteeing that anything will go either way or that you're going to do well or do bad. But for me, I think in my own personal non-professional opinion, Texas Roadhouse is probably still undervalued, especially when you consider how much growth they're going to have in terms of opening new restaurants, in terms of, well, I mean, that's the main thing you're looking for is that more restaurants exist because then there's more cash flow because you're owning the corporate side of it. So you get a percentage. You either get a percentage of what the franchisees are bringing in or you're opening new stores that you fully own. So that's more cash flow there. I think this is an excellent restaurant. I think that the price point makes sense. I think that fast food is really going to be stagnant. I think that their only option to grow has been to raise prices, and that has pushed people towards more restaurants like Texas Roadhouse, like Chili's, like all these places. But I think Texas Roadhouse is really just the best version of a sit-down chain. Next up, we have Meta Platforms, ticker symbol Meta, currently up $223.12 or 19.92% on this. Man, I mean, this has been just going crazy either way. It's very volatile. I'm holding it for the long term. I will say, though, I'm definitely going to consider selling some Meta if it ever hits like 1,000 a share, just because I feel like that would be pretty insane. I even think at like 750, we're probably getting pretty close to overvalued territory just currently. But I do think that Meta has a lot of advantages when it comes to AI. I've talked about that a lot. But overall, I think if there's AI that makes ads better, Meta is going to be really the primary beneficiary of that technology. And I think that Meta has been run correctly. I think it's a very strong company. I think it's going to continue to increase in value. I think it's going to be able to continue to increase their cash flow. I think they're a very monopolistic company, and they're the best performing company in the portfolio right now. So I'm really a big fan of Meta. Still glad I sold one share, though. Locked in some profit there. But overall, going to hold out these 2 shares and just kind of let them ride because I think they're going to keep increasing. Next up, we have Prologis, ticker symbol PLD. I'm up $67.05 or 4.16%. This obviously doesn't include any dividends as well, but I'm really happy with this stock. The performance overall, I'm happy with myself for picking some shares up for pretty cheap. Not really buying any more since then, just been sitting on it. Good dividend, good company. It's a triple net real estate investment trust that owns warehouses, specifically logistics warehouses, so just big warehouses. They don't pay for any of the stuff because they are triple net, so that includes taxes, improvements, maintenance. All that goes to whoever's renting their warehouse, and Prologis just collects the check for rent. Sometimes they sell the warehouses if they get a way better value on it than what they paid. Overall, I just think that the long-term prospects of the stock are very good. I think that we're going to see more advanced logistics systems as AI gets more competent. I think that we're going to see a higher demand for logistics warehouses, which is going to make a lot of sense. Next up, we have Waste Management, ticker symbol WM. This is up 15.86% or $233.21. So this has been really just another high performer in the portfolio. I think this is second overall in the portfolio. Really wish I would have added more of this when it was, oh my gosh, it's at 242 now. Oh, I was adding a little bit when it was at 220, and I thought that I was overpaying for it. Maybe it's 228. It was somewhere around there. But man, this stock just keeps continuing to crawl its way up consistently. I think that this is a very strong company. I will never sell a share of this unless I literally have to. I'm going to collect the dividend forever. I would like to invest more in this, even though I think that it's overvalued at this point or too expensive at this point. But I really think that this is just an amazing company that can weather pretty much any economic conditions. If my tech stocks start doing really well, and I get a crazy amount of profit from my tech stocks, I will definitely trim some of them and put it into Waste Management. But my goal is to have at least $10,000 invested into Waste Management because I think that it's a very strong business that you don't really have to look at very much. There's organic growth, there's M&A growth, very boring business, makes a lot of sense, makes a lot of money. You want to watch this one because if this one goes down, this is the type of stock that you want to hold for the long term. Next up, speaking of the long term, we have Energy Transfer. I've talked about Energy Transfer a ton. I'm not going to talk about it a crazy amount here. Obviously, the bigger positions in the Webull account. I get a very high dividend from this. This isn't just my only position. If you're wondering, I have an account at the end of this video that I'm going to show you that I used to trade on, and basically I took the profits from this stock and kept them in. This stock pays me about, I think, $142 4 times a year. $142 4 times a year. Obviously, I'm down 8.8% on it, but I don't really care about that. I'm not selling any of this. On the other account, I think I'm up like 50% or something like that on my other Energy Transfer. I'm a holder of this stock. I think anything below 20 is a good deal, but I do think that you're having some risks in terms of just environmental risks because they own the pipes to transport natural gas to different places. They also own, I believe, 49% of Sunoco. They also own a bunch of other types of energy, so they are sustainable into the future, but the bulk of their business is the pipeline infrastructure that they do own. I really think that energy demand is going to increase over the next couple of years with AI and the training and all of that type of stuff going on. I really think that you're going to see energy start to trend up. We're also having more infrastructure. So I really think that Energy Transfer is a good long-term play, and I'm just going to hold it. I'm not selling. Next up, we have American Express, ticker symbol AXP, up 8.68% or $166 so far. I still think anything under 300 is good for American Express, just personally. I obviously got in a lot cheaper. I was buying up more. Didn't sell, don't want to sell. I want to continue adding to this position at some point. I just need more cash. I really like this company. I think it's a very easy to understand company. I think it's very safe, very secure. There's a lot of payment processors. I think they're very monopolistic. There are obviously alternatives where you have like Visa, you have MasterCard, all these other companies that really kind of do the same thing. But I think that American Express is just the one that I want to go with. I think it's high quality. I think that the revenue has been very consistently growing each year. And I think that it is really worth a premium, but I don't think you're having to pay a premium right now. I think it's very close to fair value. I think that's a good argument to make. And if you're looking to actually be an investor and hold this over the long term, I think you're getting a pretty fair price here. Look, and again, none of that is financial advice. I'm not a financial advisor. Just want to clear that up with you guys. Next up, we got Amazon, ticker symbol AMZN. It is currently up 1.73% from my average cost, or $59.75. Feels good being up on this, but overall, I really think that we're going to hit all-time highs with Amazon. I'm not selling for anything less than all-time highs. I'm demanding that. I think I might even want to wait until this hits the 400 amount, which I think would be crazy, but I definitely think Amazon will eventually get there. It's going to take a very long time. When it hits new all-time highs, I think I might shave a little bit, or I might just keep holding because that's kind of my affirmation that it's going to keep running. I think that this stock could run a lot more. Doesn't really make sense that it's valued where it's valued. Just from my personal opinion, I think that this stock is going to be worth a lot of money into the future. Just like I think the next stock is going to be worth a lot of money going into the future. Salesforce, ticker symbol CRM. This one, they had a good quarter. But the problem is that the M&A really soured everyone on Wall Street. But I'm fine with M&A. If you need Informatica to improve your AI, buy them. If it's a smart thing, I understand that the issue that Wall Street had with this latest earnings, and this might be its own video of me just rambling about my issues with Wall Street and my issues with what they're looking for. Their problem is that Salesforce is turning into a more mature company. Well, guess what? They are. They're worth like $330 billion as a market cap. They just are a more mature company. You're not going to get the crazy growth that you got in the earlier days. But I really think Mark Benioff is a very good CEO. I am seeing increased revenue. That's the main thing I care about. So I'm fine with that. Increased net income, also happy with that. I think Agentforce is going to be a surprise success. I really do. I'm going to be very surprised if they aren't a big player in AI in some way, making a lot of money off of AI. But, only time will tell. I think that this stock's extremely undervalued for what it could do, and I'm going to be a long-term holder. I'm not selling anymore. I think I'm going to continue buying into it even more, even though I've sunk $5,500 in. Sometimes that's how you can tell if you're truly a good investor, if you're willing to get gut punched. So it might even take a year. It might take a year of me holding Salesforce from today to be able to turn a profit on it again. But I'm willing to wait for that because I really think that it's undervalued. I think that the story is a long-term success story. I think that it's going to double and triple and continue to grow over time. I don't think anyone's arguing that tech's never going to hit its all-time highs again. I think that Salesforce is included in that, and I really think that Salesforce is an extremely undervalued stock for what it is. And I implore you to do your own research and let me know what you guys think about Salesforce. because I really think that Wall Street's wrong on this. I think that they don't have a long-term enough of a perspective. And I'm very happy with this because really it's a transfer of wealth between the people who are willing to be patient and wait for the growth and wait for a lot of these things to materialize in AI. If you see, like, with the headlines and how much things move, a lot of people aren't willing to sit back and really wait on things. And you can kind of see that with stocks like NVIDIA. There were years of poor performance, but the people who stuck it out and saw what was going to happen and made sense of it made a lot of money. And I actually was an investor in NVIDIA in 2019, and I sold out because I made a little bit of profit. I don't really even like thinking about it, but I think that the same thing is going to happen with Salesforce. And I mean, every time in terms of me being an investor, the thing that frustrates me the most and the thing that I get wrong is that I sell out when I get up a little bit. And so with Salesforce, I'm holding this stock. I'm not selling it until we hit new all-time highs. I'm just going to be continuing to add and continuing to hold what I have, collecting the dividend, and not thinking about it. And sorry for the side tangent, but next up we have Vici Properties, ticker symbol Vici. Currently up 0.75% on this. This obviously doesn't include the dividend. I've only put $5,500 of my own money in. The rest has been dividends reinvested. So we're up about 174 on what I originally put in. Now I'm just going to be collecting the dividend in cash, but I do think I'm going to continue to reinvest in Vici just because, again, like a lot of these other stocks, I want to have at least 10 grand worth of Vici. I think that'd be a huge payday. Obviously, I wish I had more money to just instantly throw in there, but I think Vici is going to continue to grow. It's a triple net real estate investment trust as well as Prologis. They own a lot of the physical real estate on the Las Vegas Strip. Great company. Very obvious how they make their money. Makes a lot of sense to me. Seems like it's overvalued. I think even here if you're getting in, or undervalued, sorry. I think even here if you're getting in, you're getting a fair or undervalued price for what it really is. The dividend yield's good. I think the whole company's good. And I really like being an investor in Vici. I think that it's a very undervalued opportunity. I think it makes a lot more sense other than other real estate stocks because it's less likely that you're going to have a casino kind of default on their rent than you're going to have an individual tenant default on their rent. They're not actually owning the casino rights. I have to always say that too because I think it's an important thing for people. Maybe it's your first time listening to one of my videos for you to understand. Vici does not actually run the casino or have the rights to any of the profits within the casino. They just own the physical real estate, and then the casino operator who runs the casino pays them rent. The casino operator is also, because it's triple net, they're also responsible for any costs incurred on the property. Same thing with Prologis. Your taxes, your maintenance, all of those types of things completely fall on the tenant. Next up, we have the Webull account. So here, I haven't really touched anything. Again, like I said, I don't touch anything in this account. I have some DraftKings here. It's down 11.52% overall. Again, haven't really sold it, haven't bought anything. Just don't really look at this account. Also have some Microsoft up 9.41%. I mean, this keeps growing. Every week I look at it, I'm just like, wow, this is crazy. Because I remember when I was down 10% on it, just bag holding. And now it's at $4.62 a share, which is crazy. Because I remember when Microsoft was like $178 a share. If anyone else can remember that, I mean, crazy times we're living in. $4.62 a share for Microsoft. And I'm not selling that. That's insane. But here we have, kind of my crown jewel of an asset that I have, I suppose, is my energy transfer position, currently up 49.36%. In this account, it pays me $108.08 a quarter, so can't complain there. Used to have 550 shares, but, I sold off a bunch, took profits, sold off a lot of this account, and I bought a car with cash, and I have to say it was worth it. I still have the car, love the car, and I got to keep some of it behind. And I really wish I would have just continued to hold. That's one thing I will tell all of you guys. If you're thinking about selling out and taking profits, I think you should take some, but I really think you should continue to hold some of your assets if you believe in them long term, and if you're willing to take that risk with that amount of money. I mean, it's all up to your personal tolerance, but the one thing I have to tell you guys that I always mess up on, it's not buying when things go down. It's not selling when things are coming up. And that's one thing that I really am needing to work on, and one thing that I'm ready for. When everything starts coming back up, obviously I'm going to trim my positions a little bit, but in the long term, I really just want to hold. And I might not trim at all. I might just be a psychopath and just hold all my positions just overall till the end. But only time will tell, because if I don't see anything attractive on the market and, I don't need the cash, I don't need to sell anything, I might just put it into a CD or do something like that. But I'm really a buyer still of stocks. I'm not a seller. I don't like selling in this market. I think we're in a very negative market. I think you have to be kind of greedy right here. And I'm going to continue buying, probably going to continue some Salesforce going forward. Maybe might even add a little bit of Energy Transfer, but I do feel like I have too much at the moment. I think that Amazon is still really attractively priced. I think if I could get some more of that around under the 210 amount, I think it'd be pretty good. But yeah, I don't know. Man, how long is this video? Wow. Okay, 21 minutes. Okay. Yeah, that seems pretty long. I'm going to wrap it up then. Thank you guys for watching. If you guys want some more ramblings or whatever, leave a comment that you want me to ramble more or what you want me to ramble about. Really appreciate all of you guys who watch. Thank you for watching. Have a great day. Bye.